There's a huge shakeup happening in the world of online finance here in India. The rules of the game for advertising financial services are changing in a big way, and it's all being led by the market regulator, SEBI. So, what does this all mean for the ads you scroll past every single day? And more importantly, for the safety of your money? Let's get into it.
Have you seen this before? You're scrolling through your social media feed and bam, an ad pops up promising something just like this. Massive guaranteed returns with absolutely no risk. It feels like these promises are everywhere, right? And yeah, that old saying, it's never been more true. These unbelievable claims aren't just harmless hype. They are the bait. They're being used in a massive wave of online financial scams designed to lure in people just like you and me. And that is exactly why SEBI, the Securities and Exchange Board of India, finally said, okay, enough is enough. Time to change the game.
Now, this didn't just happen overnight. SEBI's been laying the groundwork for a while. It all started back in April 2023 with an initial code for ads. But then, in March of this year, they dropped the real game changer, a mandate that all advertisers have to be verified. And they put a firm deadline on the calendar, April 2025. So, let's really dig into the heart of the problem. What was actually going on online that forced SEBI to make such a decisive move? For a long time, the digital world of financial ads has been, well, kind of like the Wild West. You had so-called experts giving misleading endorsements, those crazy promises of risk-free returns we just talked about, and maybe the most dangerous part, dubious advice from entities that weren't regulated at all. It was the perfect breeding ground for scams to just run wild all over social media. So, to clean up this Wild West, SEBI is rolling out its new verification mandate. You can think of it like a new sheriff just rode into town, ready to bring some law and order. So what's the big idea here? Well, it's actually pretty simple, but it's also incredibly powerful. From now on, any registered financial company or advisor who wants to advertise online has to verify who they are. And here's the kicker. They can't just use any random email or phone number. They have to use the exact contact details they have registered with SEBI. This creates a direct, undeniable link from the ad all the way back to the official entity. For these companies, it all boils down to a pretty clear four-step process. First, they've got to register their official contact info with SEBI. Next, they use that same info to get verified on big platforms like Google and Meta. Then, of course, the ads themselves have to follow all the new content rules. And the final deadline to get all of this done is April 30th, 2025.
And let's be really clear about the why behind all this. This isn't just about creating more paperwork. The entire goal is to boost transparency and, most importantly, protect regular investors from the kinds of scams that have been running rampant on social media for far too long.
Okay, so we've got the rule, we've got the reason why, but what does this actually look like for the big banking, financial services, and insurance companies? How does this change their day-to-day advertising strategies? Honestly, the change is like night and day. The before picture, that was all about screaming best returns, using aggressive hype, and hiding the real risks in the tiny fine print. The after picture is totally different. It's about verified identities, transparent information, and risk warnings that are right there, front and center. It's a fundamental shift in philosophy. This means these companies need a whole new marketing playbook. Priority number one is no longer just grabbing your attention. It's about building real trust through honesty. The whole content is king idea now means creating content that actually teaches you something. And because these rules will keep changing, their strategies have to be agile, and they'll need to use tech not just to sell, but to constantly make sure they're following the rules. All right, but what if a company just doesn't do this? What if they decide to ignore the rules and take their chances? Well, SEBI has made sure the consequences are significant. Let's talk numbers. The potential fine for breaking these rules is up to 25 crore rupees. Yeah, that's a figure that's designed to make one thing crystal clear. Not complying is a very, very expensive mistake to make. And believe me, it is not just about the money. SEBI can literally cancel a company's registration, which would put them out of business. There's the threat of legal action, both civil and criminal, and the damage to a company's reputation could be devastating and last for years. Basically, breaking these rules just isn't an option. All right, let's pull back for a second and look at the bigger picture. All these rules, they're part of a much broader strategy to build a market that is fundamentally safer and more trustworthy for every single investor out there. And don't think for a second that SEBI is just setting these rules and them walking away. Nope. They've got a whole strategy to make sure this works. We're talking regular audits of companies, requiring them to monitor their own ads in real time, and importantly, creating ways for investors to give feedback and report ads that seem shady.
But here's a good question. Is SEBI doing all of this heavy lifting by itself?
The answer is no. And that's where ASEI comes into the picture, the Advertising Standards Council of India. This is a self-regulatory body that's been pushing for ethical advertising for years. While SEBI makes the law, ASEI provides the ethical backbone. Think of ASE as a crucial part of the team. They provide a code of conduct, they're the ones who look into complaints from people like us about misleading ads, and they work hand in hand with regulators like SEBI. Together, they create a much, much stronger safety net for everyone. So when you put it all together, what do you get? It's not just one new rule. It's a massive collective effort. You've got SEBI's hard regulations, ASCII's ethical guidelines, and a real shift from the industry itself, all working toward the same goal, a financial market that's safer and more trustworthy for all of us. Which brings us to the big question, the one we're left with at the end of all of this. These new rules are, without a doubt, a huge step in the right direction. But in the long run, is a little verified checkmark next to an ad really going to be enough to rebuild the investor trust that's been broken by years of false promises? I guess only time will tell.